Hi, welcome to accounting. Today we're going to be working on a worksheet. It is the statement, so it should have a heading, who, the name of the company, what, the name of the statement, a worksheet, and the date. Since cash is on the statement, it should be for a single date and time. The first thing we're going to start with is the trial balance. So we have all of the accounts and their associated debits and credits listed, and at the bottom we have total debits equaling total credits. That's important. The next thing we're going to do is we're going to talk about adjustments. Assets need adjusted because sometimes they get used up during the course of an accounting period. So if you think about rent, we stay in the office space, and after a month we've used up a month of rent. So we need to account for that. So I'm going to come down here and create a prepaid rent T account, put in the $5,000 in the normal debit side, and think about the fact that we paid it on October 1st and it was good for 5 months. It's good for 5 months and now it's no longer good. So we want to reduce it for the month that we used. So what we want to do is we want to say 5,000, the amount that we spent divided by the number of periods will give us 1,000. So we want to reduce rent by that $1,000. And we do that, we should have a new balance in the prepaid account of $4,000 debit. So what we want to do is we want to come up here to prepaid rent. We want to put in a credit for $1,000 so that we can reduce the balance of the account. So that's what we're doing here. We're going to put in $1,000 to reduce the balance of the account. And then we need an offset because for every debit we need, or for every credit we need a debit, or every debit we need a credit. So we're going to come down here to rent expense, and we're going to recognize that we had a cash outflow, even if the cash wasn't paid in this month, but we did have an outflow and a use up of assets in order to generate revenue. We always want to record the expense and the period in which it helped us to generate revenue. So we had the office space this month. We want to recognize the expense in this month. The next account is supplies, and supplies, like prepaid rent, is not a capital asset. They are considered a current asset, and we just make adjustments directly to them. So I'm going to make a little supplies T account here. Get rid of the other information. And supplies is an asset, has a normal debit balance, and it starts at $500. If we look at the additional information, when we went in and counted on October 31st, there was only $250 left in supplies. So during the month, we used pencils, pens, toners, etc., and we used up supplies. When we went in and counted, there was only a value of $250 left. So we need to make an adjustment of the account. So we go from 500 and get to 250. So what we should do is subtract 250 or credit, because supplies has a normal debit balance, supplies by $250 to get to the desired or target. Sometimes I like to use the phrase target balance. So I'm going to come up here to supplies. I'm going to record a credit. Oops, I'm the wrong thing. I'm going to record a credit of $250. Then I'm going to come down here to supplies expense. I'm going to recognize that you use pens, paper, toner for the month, valuing $250. The next thing I want to talk about is equipment. Equipment is a capital asset. It has a useful life of more than 1 year, and what we do is we do something called depreciation. But equipment has a historical cost or a cost. You might have heard of the historical cost or the cost principle. And we want to make sure that we maintain this account to be $11,000 all the time. We never want to change the value in equipment. Until we dispose of or stop using the asset, we wanted to show this. So we have a special account that we use called accumulated depreciation. And accumulated depreciation is a contra asset account and has a normal credit balance. So accumulated depreciation is a contra asset account with a normal credit balance. And we use that instead of equipment to show the wasting of the asset or the using up of the asset. So we will use that, and we'll talk about book value. And book value would be equal to the asset account this case equipment, less the accumulated depreciation. And that's how we keep track of it. So we can keep this historical cost and keep track of the depreciation. So we have some information here that says we are going to depreciate on a straight line basis. And straight line means that we are going to depreciate the same every period. So straight line equals the same amount each period. And the formula for calculating straight line depreciation is, so I'm going to put straight line is equal to historical cost minus salvage. And salvage is what we think we can get for the asset at the end of its useful life. So we could sell it on eBay or sell it to a scrapper, put it in the penny saver for the salvage value. And then divided by useful life. And you want to be careful. Here our useful life is given in years, but we're doing our worksheet for a month. So we want to make sure that we change 5 years into the number of months. So 5 years times 12 months in each year would give us 60 months. So we'll do our example here. We're going to have 11,000, the amount here in your sheet, minus salvage, which I gave you here is $1,000. And then we're going to say that $10,000 is divided by 60 months, the number of periods for the useful life. And we get 166.67. For our example here today, I want to use round numbers. Obviously in accounting we really don't use round numbers, we use pennies. But I'm just going to round up to 167 for ease. So we're going to record the accumulated depreciation as a credit, remembering that it has a normal credit balance. And then we're going to come down here and we're going to record depreciation expense. And this is where we record the expense for capital assets. We depreciate them and recognize a little bit of expense each period in which we're using the equipment and helping to generate revenue. So next thing I'm going to do is I'm going to sum the columns. And when I sum the columns, our debits should equal our credits. Very good. Next we have the adjusted trial balance. The adjusted trial balance is going to be taking the trial balance and adding or subtracting the adjustments column to find the new balance. So for cash, you can see that we didn't have any adjustments. I'm just going to leave it at 15,000. For prepaid rent, I had a credit of 1,000, so I'm going to reduce 5,000 by 1,000. And I'm going to say 5,000 minus 1,000 is 4,000. And same thing for supplies. 500 minus 250 is going to give me 250. Equipment, because of that cost principle, should always stay the same. No adjustment, so it's 11,000. Accumulated depreciation, there was a 0. So a 0 plus a 167 credit is going to give me a 167 credit. Accounts payable and capital had no adjustments, so we're going to keep them as the same credits. Same with drawing, no adjustment, we'll just bring it over. And fees, income had no adjustment, we'll just bring it over. Now these expenses started out at zeros, so zeros plus a debit is going to give us a debit balance. So I'm going to copy our expenses and bring them over into the debit balance. And then I'm going to sum my columns, and when I'm done, my debits should equal my credits, and they do. Very good. So now we're going to move on. We have the income statement and the balance sheet. Some of these items are going to go on one, and some of them are going to go on the other. Cash and capital and accounts payable all go on the balance sheet. The only thing that's a little funny is that we're going to add drawing. We don't have a statement of owner's equity account here at all, so we're just going to kind of add drawing since it's a contra equity account with capital. So we're going to copy from cash down to drawing, and you can see I put a little line there to kind of jog your memories. We're going to copy it over and put it in the balance sheet. And then the income statement has income and expenses. which we have listed right here, our income and expenses. We're going to copy those accounts and put those in the income statement. We're going to copy those and put them right in the income statement. And then we're going to sum. So I'll sum those down, sum these down, sum the balance sheet column and the balance sheet credit column. Now, as I'm doing this, you're probably saying to yourself, whoa, these are not in balance. And I'm going to just ignore this error because I didn't do the whole entire column, but we know we're okay. So they're not in balance. I have 6,000 here and 1,417 here. But that's okay, because if you look at it, $6,000 is my fees income and this is my total expenses. If they were equal, I could never have net income. I could never have net income. So what I'm going to do is I'm going to say 6,000, my revenue, minus my expenses, just like I do on the income statement. This is shorthand for the income statement, gives me 4,583. And that really represents my increase in capital, the increase in capital that you see on the statement of owner's equity. Remember that we don't have the statement of owner's equity. So we're just going to kind of do shorthand here again. We're going to type 4583 under the capital. See, we have capital here. We're going to type it under the capital column to kind of simulate or represent our increase in capital. And then we're going to sum down. And we'll sum this one down. Oops. I missed a column there. Sum that down. So equals 1,417 plus 4,518. There we go. Didn't want to sum. Sum the balance sheet, both sides. So now you can see that we are in balance. We have all the columns at the bottom, the debits equaling the credits. And again, the reason why we're not going to equal here is because we're not doing a statement of owner's equity and we have to calculate net income. Because if this was always equal, our business wouldn't be a business very long because they wouldn't have any income. So that is how you do a worksheet. It does seem like a lot of columns, but really it's quite simple if you take the columns one at a time and just pay attention to your additional information. Thank you very much. I hope you have a great day.